All right, all it's Axe. It's 9/11/22, and this is a supplement to the market update video. Watch that first if you haven't seen it. This is the PCRIs for next week, and sort of an overview in general. So we've got a lot of markup here. Obviously, some of it has been described via the Discord. I've got some just some price movement setups here just to compare where we're at now to what we've seen over the past few months. Past year, that sort of thing. I could just add one more here. You can see that was a much smaller move. Anyway, so we got 10%, just over 9. Things are not always what they seem, and so this could be. That's one of the reasons I say that this could be a new period in time where we may have bottomed or we're about to bottom. I did talk about this trend line here. An underthrow or fake breakdown and coming back up, and we've sort of done that. You can see just based on these simple levels that 4160, 4170, and this is SPX, is key. And if we were to fade back underneath here, that's obviously an issue too. And we're trapped under this, so even if we broke through here, we're gonna have a challenge up into the 4400s. So even if we do bounce and keep rallying out of here, it's not gonna be super simple, but the conditions are set. It's more bullish than bearish, at least as of last week. So let's use the PCRIs as a guide. You can see I've got these time cycles set up, and this is what gave us at the time. If you look at the overlap here, that was on the 2nd of September, right near our low. At the time, we were looking at a time cycle that gave us mid-April and into 1920 April, which is again, the market update I just showed explained how we could be here in time, and also the PCRIs. Basically, I measured this spike to sort of the low and how we broke out of it. Very similar setup. And you can see if you watch just the actual PC put call ratio here, you can see we have this whole window and we came down and tested this red line, very similar to what we saw. So the move in general is very similar to this 3 May. And again, we've been looking at April. So this is why I say everything's sort of inconclusive. We have conditions here that are similar to other periods in time, but nothing's really a perfect match. We do have sort of from a fractal perspective, we came up and we crossed down over here. Again, that's very similar to May, and May was very similar to this, where we chop around, whether we're in April or in May. Basically, you chop around and then you go to set a new swing low. Okay, so we're watching, that would finish off around, that finished off in this low of the 19th of May. That would finish us off, if all things are being equal, around 10 October, which happens to be our VIX cycle. So that's how I said, that's how we found confluence for this VIX move, that we expect a VIX cycle high around the 5th to the 10th of October. So that's how we found confluence for that. So we're going to watch and see. This OPEX week, again, are we going to chop around and come down and finish off that? And we could double bottom, and that could be it. So I'm not going to make any assumptions. I'm just going to let the data and the price be my guide. But I just kind of want to show you where we're at. So in general, the PCRIs, once we cross over here, that tends to indicate a low or a bottom. And we closed with again, this 25 August, we closed in the same spot, and then we completely reversed. So that's not out of the question. Historically, though, anytime you get a major reversal like this on the PCRIs and the indicators, crossover, crossing back down, that typically signifies a bottom. And if we look back at, let's see, the end of January, similar thing. We set it up before rolling over. If we look at February, very similar. We crossed over. If you look at, there's basically 2 periods there, and that was 8 of March and 17 of March, where we crossed over this red line like we've done here, and that indicated a major low or a swing low. And again, this last indicator here, very similar. So this to me indicates that we're in sort of a swing low period. I don't think it's going to be as simple as we just roll over. I mean, for bears, we would like that. We have like I said, we have the VIX cycle set up. We have this time cycle here, and it's possible. I think either way, we have some faking out to do. And that was just a big move, 3,900, 4080. So we have a lot to unwind there. Basically what I'm saying is we have a lot of bullish energy. You can see we closed with all these calls in place, these hedges off. That takes a while to unwind. It was the same thing when we formed the top here, we crossed over here. And I was watching this the whole time, and then we back tested it. And I said, that's probably a top, and it ended up being a top. The similar thing here, we crossed back over. That's going to be a low. Unless there's a huge sell-off Monday, this is going to have to round off and come back up. So until we see this roll back up, I can't get bearish from an indicator's perspective. And again, if we go back historically, let me just see, like anytime we're coming down out of here, you can see we're already well out of our lows in 2020. If I go to 2018, let me just turn this off here. We sort of got our spike, our capitulation moment. Let me turn it back on, and you can see we came back down, and that basically signified a low. And even if I go to like, let me turn that off, periods here, like this low in October of 21, we rolled over and that was it. So historically, like if we weren't in a bear market, this is I would say, okay, it's low, it's the lows in, load the boat, let's go, let's rock, new all-time highs are coming. But because we've had so many different like variations of this, zigzag move, impulses lower, we still have to be cautious. And you can see, just looking at this chart, there was liquidity to pick up here. We could easily reverse and come back down to this 3780, a single print down here at like 3660. So again, we're just going to let the data be our guide. We have time cycles that suggest if this does chop around and reverse, October 10th is sort of like a VIX capitulation moment. But again, as I talked about in the last video, and as you see here in the PCRIs, if we keep going higher or we back test this and go higher, the chances are high that the bottom's in, and we're gonna start to make a move back into this 44 to 4600 range. So that's the PCRIs portion of it. I hope that makes sense. Just a quick note. You can see, like, we look at the moves like this here from November to December. Very similar setup. We crossed over, we went to new highs, and then that began the whole new thing, the whole bear market. Similar here. Like, you can see every move is basically two grids. 1, 2, 1, 2, 1, 2. So we're at a spot where bears want to get short, and I think they could get run over. At least their puts are going to expire worthless. So I hate being in the middle, but that's really what the data says. There's options. We're in a bear market. Macro sucks, but we could bottom, so I don't want to be caught short against that. I hope that makes sense. Hit me up with questions. Thanks, guys.